Welcome back to the Crow Ticker Podcast, your Wednesday morning edition covering major financial magazine headlines, everyone.
It's December 4th,
Oh, yeah.
and we've got a wild mix of global financial headlines to unpack today.
Okay.
From political intrigue in South Korea
Mm.
to corporate shakeups in Silicon Valley and even the future of soup, believe it or not.
Okay, so you've got my attention.
Right.
Let's dive in. Where do we even begin with all of this?
Well, Bloomberg has this fascinating report on South Korea where President Yoon Suk-yeol briefly declared martial law,
Wow.
followed by an impeachment motion. It's been a roller coaster, and the South Korean one is definitely feeling the pressure.
Wow, that's intense. So how is South Korea's central bank reacting to all of this political drama? I mean, that has to have some impact on the markets, right?
Surprisingly, the Bank of Korea Governor Ri Chang-young seems pretty unfazed. Bloomberg quotes him saying he doesn't see any reason to change their economic outlook because of these short-lived political events. He actually believes South Korea's economic dynamics can stay separate from the political situation,
Okay.
thanks to strong market fundamentals and their mature democracy.
That's a bold statement considering the Bank of Korea just cut interest rates
Right.
and lowered their growth forecast for 2025.
Yeah.
According to Bloomberg. They're clearly preparing for something. Didn't they mention the potential trade headwinds from the incoming Trump administration as a factor?
Right, and that's where it gets interesting. Ri also mentions having many tools to deal with the expected transition period, but he's keeping those cards close to his chest for now. Makes you wonder what tricks they have up their sleeves.
Definitely makes you think. Speaking of central banks taking different approaches, CNBC reports that the Bank of England is actually hinting at multiple interest rate cuts in 2025.
That's right. Governor Bailey suggests that inflation is cooling faster than anticipated,
Okay.
giving them the leeway for potential rate cuts. It's quite a contrast to the Bank of Korea's steady-as-she-goes approach, wouldn't you say?
Absolutely.
Yeah.
One central bank is bracing for impact from political instability,
Yeah.
and another is already looking ahead to a post-inflation world. Fascinating to see these global divergences play out.
Indeed. Now let's switch gears to the corporate world, where Barron's reports some leadership shakeups that caught my eye. Intel's CEO is stepping down after a rough year, while the CEO of Campbell Soup Company is making a surprising jump to the NFL.
Okay, I have to admit, the Campbell Soup CEO going to the NFL is not something I saw coming. But first, let's talk about Intel. What's driving their CEO's departure? They're a giant in the tech world, so this feels significant.
Well, it's been a challenging period for them. Barron's highlights declining market share,
Yeah.
some costly investments in manufacturing that haven't quite paid off yet,
Right.
and a missed opportunity in the booming AI chip market. It's a lot to grapple with, and it seems like the board is looking for a change in leadership to navigate these challenges.
So a classic case of needing fresh eyes and a new strategy, maybe.
Possibly. Now onto the world of soup and football. Campbell's CEO, Mark Klaus, is actually leaving on a relatively high note. He spearheaded a successful diversification strategy, pushing Campbell's beyond just canned soup.
That's interesting. So what's next for Campbell's? Are they going to be the official soup of the NFL now?
Yes, not quite. But their recent rebranding and acquisition of Sovos brands, which makes Rao's pasta sauce,
Okay.
signal a clear shift towards snacks and other packaged food categories. They're trying to appeal to evolving consumer tastes and adapt to the changing market landscape.
Makes sense. But Barron's also points out that even Campbell's is feeling the pinch from weak consumer spending, particularly when it comes to snack sales.
Yeah.
So even with this new direction, they're still facing some headwinds.
You're absolutely right. It highlights the reality that even companies trying to innovate and stay ahead of the curve are still vulnerable to broader economic pressures.
Yeah.
And speaking of shifts in the landscape.
Yes, let's talk about those. I know we have a couple of big ones on the agenda today. One involves a major move in real estate, and the other involves Saudi Arabia's hold on the oil market.
Precisely, the Wall Street Journal reports that Wells Fargo is selling its iconic San Francisco headquarters. It seems their power base is shifting
Interesting.
towards New York and Charlotte, where their CEO and other key executives are now based. Quite a change for a bank so deeply rooted in San Francisco's history.
That's a bold move.
Yeah.
What do you think the long-term impact of this relocation will be for both Wells Fargo and the San Francisco economy?
It's definitely a story to watch. The Wall Street Journal suggests it could have implications for both. Now onto the oil market. The same article paints a picture of Saudi Arabia struggling to control oil prices like they used to.
So is their reign as the oil king coming to an end?
Well, they're facing several challenges, according to the Wall Street Journal. Increased U.S. oil production is a major factor, along with internal pressure within OPEC, plus that group of oil-producing nations. And then there's the wild card, the incoming Trump administration, and what their energy policies will look like. A lot of uncertainty swirling around.
Makes you realize just how interconnected everything is. Domestic politics, global energy markets, corporate strategies, and of course the average investor trying to make sense of it all. Speaking of investors, I know we have one last headline to discuss today, and it's a big one. It has to do with the traditional 60/40 portfolio and whether it's still relevant in today's market.
Ah, yes, the 60/40 portfolio, a classic investment strategy that's being called into question.
Correct.
MarketWatch reports that State Street is raising concerns about its effectiveness,
Yeah.
given the current market conditions.
Yeah, I read that article. They're basically saying that stocks and bonds have been moving in the same direction for an unusually long time,
Right.
which undermines the whole point of a 60/40 portfolio, which is to diversify and reduce risk.
Yeah.
So if the classic approach isn't working anymore, what are investors supposed to do?
That's the million-dollar question, isn't it? State Street suggests looking beyond traditional assets
Okay.
and considering alternatives like gold commodities and real estate. They argue that these assets could offer better diversification and potentially hedge against inflation in a way that a simple stock and bond portfolio can't.
So a pretty big shift in thinking for a lot of investors who are used to that classic 60/40 approach.
It certainly is. But it speaks to a broader theme we've been touching on throughout today's deep dive, which is the importance of adapting to a rapidly changing world. Whether it's central banks adjusting to political turmoil, companies reinventing themselves, or investors reevaluating their strategies, the ability to adapt and stay ahead of the curve is crucial in today's dynamic environment. But we'll dive more into those important details in just a bit.
All right, sounds good. We'll be back in a moment to continue unpacking all of these complex and interconnected headlines and what they mean for you.
Welcome back. Before we dig deeper into State Street's recommendations for investors, the ones we were discussing from the MarketWatch article,
Yeah.
I think it's worth circling back to that Wall Street Journal piece
Okay.
about Saudi Arabia and the oil market for a moment.
Oh, absolutely. It feels like there's a lot at stake there, both for Saudi Arabia and for the global economy. What are the specific challenges they're facing in maintaining their grip on oil prices?
Well, as we mentioned, rising U.S. oil production is a big one. The U.S. is pumping out significantly more oil these days, and that increased supply puts downward pressure on prices. It's basically a tug-of-war for market share, and Saudi Arabia is finding it harder to dictate the terms like they used to.
And what about those internal pressures within OPEC Plus that the article mentioned? What's going on there?
It seems there's some disagreement among the OPEC Plus members
Right.
about how to respond to this new landscape. Some countries, particularly those with weaker economies, are pushing for higher oil prices to boost their revenues. But others, including Saudi Arabia, might be more inclined to maintain market share, even if it means accepting lower prices in the short term.
So a classic case of conflicting interests. It's like a high-stakes poker game, and everyone's trying to figure out the best hand to play. And then, of course, you've got the wild card of the incoming Trump administration and their unpredictable energy policies. What a mess.
It's certainly a complex situation with a lot of moving parts, and it highlights the interconnectedness of global markets and politics. What happens in the U.S. energy sector can have ripple effects across the world, impacting everything from oil prices to geopolitical alliances.
It makes you realize just how much is riding on the decisions these leaders are making. Okay, so let's get back to the individual investor and those recommendations from State Street. What are some specific examples of alternative assets that investors might consider, and why are those considered good alternatives in this environment?
Well, gold has always been considered a safe haven asset. It tends to hold its value during times of economic or political uncertainty, so it can provide a bit of stability to a portfolio. Commodities, on the other hand, can be a good hedge against inflation. As prices rise, the value of commodities like oil agricultural products or industrial metals tends to go up as well.
And what about real estate? I know a lot of people have traditionally seen that as a solid investment, but it's obviously a much less liquid asset than stocks or bonds.
That's true. Real estate is less liquid, meaning it's harder to buy and sell quickly, but it can offer diversification benefits and potentially generate rental income, making it an attractive option for some investors. And then there's the world of digital assets like cryptocurrencies, which some investors see as a potential high-growth area,
Right.
though it's important to acknowledge the volatility and risks involved in that space.
So a lot of options to consider, each with its own set of pros and cons. It seems like the key takeaway here is that the days of blindly following a traditional 60/40 portfolio might be over. Investors need to be more proactive and strategic in how they diversify and manage risk.
Exactly. And that brings us back to a recurring theme we've been discussing today, which is the importance of staying informed and adapting to a changing world. This applies to central banks, navigating political turmoil, companies reinventing themselves, and of course, individual investors looking to protect and grow their wealth.
So it's not just about picking the right investments. It's about understanding the bigger picture and how all these global trends and events are interconnected.
Yeah.
It's about being a savvy, well-informed investor who's ready for anything.
Precisely. And on that note, let's shift gears one last time and talk about a couple of other headlines that caught my attention today. These are less about specific investment strategies and more about broader economic and political shifts that could have significant implications down the line.
Intriguing. Let's hear it. What are these game changers? All right, so you mentioned some other game-changing headlines that caught your eye. What are those about?
Well, first, there's this piece in Bloomberg
Okay.
about the growing concerns over a potential trade war between the U.S. and China. It seems the incoming Trump administration is signaling a more aggressive stance on trade,
Right.
and that's making a lot of people nervous.
Yeah, a trade war is definitely something nobody wants to see.
Yeah.
What are the potential consequences if things escalate between the two economic superpowers?
Well, Bloomberg suggests it could disrupt global supply chains,
Yeah.
lead to higher prices for consumers, and damage economic growth on both sides. Plus, it could create a lot of uncertainty and volatility in the financial markets, making it even tougher for investors to navigate.
It's a scary thought.
Uh-huh.
What's the other big headline you mentioned?
The other one is a bit more optimistic.
Okay.
The Financial Times has a fascinating article about the rapid advancements in renewable energy technologies. Apparently, solar and wind power are becoming increasingly cost competitive with fossil fuels, and that's driving a surge in investment and innovation in the sector.
That's encouraging news.
Yeah.
A shift towards renewable energy could be a real game changer, not just for the environment, but also for the global economy.
Absolutely. The Financial Times highlights the potential for renewable energy to create new jobs, reduce dependence on fossil fuels, and mitigate the risks of climate change. It's a sector to watch closely in the coming years.
So even amidst all the uncertainty and potential turmoil in the world, there are still glimmers of hope and progress. It's a reminder that the future is not predetermined. It's being shaped by the decisions we make today.
Well said. And that brings us back to the key takeaway for our listeners today. Whether you're a seasoned investor or just starting out, it's more important than ever to stay informed, think critically, and be adaptable. The financial landscape is constantly evolving, and those who can navigate the twists and turns will be the ones who thrive.
Fantastic advice. Thanks for guiding us through this whirlwind tour of global financial headlines today. It's been an insightful and thought-provoking deep dive.
My pleasure. It's always a stimulating conversation. And remember, folks, we'll see you all tomorrow morning with new headlines from major financial magazines.